You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, coming at you live here, 1 p.m. Central, 2 p.m. Eastern. You can get it live via the Mixlers, after the fact, wherever you get your finer podcast programs. And, of course, however you listen, make sure you send in those questions, those comments. Many of you have been taking advantage of that of late. I understand it. Everyone's got questions. Try to get a bunch of you on the show today as well. Hopefully the explosion of content that has been hitting the network of late has been good for you guys. Everyone's got time on their hands these days, A, and B, everyone's freaking out about the market, so it's kind of a perfect storm for people devouring the fire hose of content that is our network. So if you just subscribe to Vol Views, you're missing out on a whole bunch of other goodness. Head on over wherever you get this show and make sure you subscribe to the full network. You can, of course, always go to our website or, of course, grab our app. It's all baked in there as well. The app is great because if you got time on your hands these days, and a lot of people do, that's how you can go back the full 13-plus years. Yes, I said that out loud. 13-plus years worth of content there baked into that app. So you will not be wanting for options-based content, I guarantee. And again, however you listen, keep those questions, comments coming. We love to hear from you guys. And joining me on the old program today, starting off with the greasiest of meatballs himself. I made some delicious meatballs the other day, Mr. Meatball, but they were the non-meat variety. They were like beyond balls, I suppose you can call them, or impossible. That's getting weird. Let's just cut that off there. So non-meat meatballs for the greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Have you tried any of these vegan meatballs, sir?
You know what? I did make a Beyond Meat lasagna a few months back for when Big Blonde Hair had her party, had her employees in town. She one of her employees is a vegetarian, so I tried making a Beyond Meat lasagna. And while my cooking is beyond good, that was beyond what I could tolerate as a individual in terms of what I was eating. I was not a fan.
Not a fan, huh?
Yeah, no. It's hilarious. Vegan leather. Have you ever heard of vegan leather?
Yes, I have.
You know what vegan leather is? It's fake leather.
It's fake leather, yeah.
It's the same crap that, should sell at $10 that they call vegan leather and then charge the same price as regular leather.
It's the same thing as rich Corinthian leather. It's all made up at the end of the day. It's all made up. The old Ricardo Montalban days. And also joining us, holding down the MIAX hot seat again this week, rare double duty, 2 weeks in a row, our old friend, Mr. Shelly Brown, the executive vice president over there at MIAX, coming at us actually via Skype for the first time, so upgrading his connection, which is great, so we can actually hear everything. And also, I can see him. He's staring at me right now, listeners. It's kind of freaking me out, which is fun. Shelly, welcome back to the program, sir.
Glad to be back, and I just have one thing to say about those Beyond Meat meatballs. The way I look at it, I only eat grass-fed beef. Those cattle only eat grass. They're vegan, therefore I'm vegan. That's my story, and I'm sticking to it.
I like it. You're vegan by proxy.
It makes a lot of sense to me, actually.
Vegan by proxy, exactly.
There you go. Good title for the show, Vegan by Proxy, as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is indeed the portion of the program where we break down the volatility that is unfolding, and there's quite a lot of it to unfold here and break down this week. Coming into Showtime here on Friday, we are once again, it's kind of like a broken record, we are once again coming off on the heels of yet another historic week by just about any measure. Last week we had historic levels of volatility. This week we have historic rallies, historic stimulus measures being passed here in the U.S. In fact, as we speak, the $2+ trillion, yes, trillion with a T, listeners, stimulus package was just approved by the House, headed to the White House, expected to be signed forthwith. So that deal is going to be pretty much the law of the land pretty soon here. And if you just for scope, give you a sense of historical scope, the New Deal, which was kind of a big deal in its day, was $800 billion. And obviously, smaller population per capita, a little bit different beast, but still, just think about the number. That puts that $2+ trillion we are spending now here in perspective. And of course, just the rumor, the whiff of this massive stimulus package sent markets rallying and soaring into the stratosphere. In fact, coming into this week, we hadn't had a sustained 2 days in a row of up days in the market since middle of February 12th, pretty much. And now we've had 3 days in a row this week. Today being the day that's bucking the trend out there, as most of the major indices now taking a bit of a break out there, to put it mildly. They're off their lows now. They're only off about 2.6% in the S, similar percent in the NASDAQ, the Dow off about 3%. So rebounding a bit off their lows here on the day. And of course, that means first we had rallies, so the vol was coming off. Now we're selling off a little bit. So the vol coming back a little bit, but not quite as aggressively as perhaps you might think. We're seeing spikes right now at about 63, almost even. It was kind of airy. Coming into Showtime a little bit before the show, we actually had pretty much all the vol unched week on week, which is kind of weird. Spikes was at exactly a 63.5, which is exactly where we were this time last week. So that was unched. Now it's off a half, down to about 63. And VIX cash was at exactly 64, which is exactly where we were last week. So it was kind of eerie. It's like we walked away and nothing had happened in the intervening week. Yet we all know quite a bit did happen. VIX cash at about a 63.5 right now as well. And our old friend VVIX, aka the volatility of volatility, is pretty much down about 13 points, 175. It's hard to say down and then say 175 in the same sentence, because anyone who follows VVIX knows that's an astronomical level in and of itself. So that just shows how absurdly astronomical we were this time last week. All right, a lot to parse here. Let's start in the MIAX hot seat, because he's staring at me right now. I could see him. And so, Mr. Shelly, what's cooking in your neck of the woods over the past week? And you know what? Last week after the show, you were regaling me with some interesting stories about when you were out in the O, actually, back in the 87 crash, and you were hearing some interesting comments over that time about how, here, vol's this level, it can never get beyond this level, and now vol's here, vol can never get that much higher. And we were hearing similar things last week, so regale us with a few of those 87 crash vol tales if you have some in your back pocket as well, sir.
I'd be happy to. It was certainly a crazy day, a day I'll never forget. But once we got the product open, which probably wasn't until noon, the market obviously was crashing. As Dow was heading down 500. Trader to my left, just behind me, not going to mention the firm, but they're a big vol trading firm, and he was selling vol, and he says, vol's 50. Vol can't be 50. It's not possible. A little later, he's selling more, and he said, vol's 100. This isn't possible. By the end of the day, he said, vol's 200. I don't know what to do. It was just a crazy day. And in the middle, one of the early rotations, I sold 100 lot of calls at $5 out of the money calls. When the market was down maybe 150, 200, Dow closed down 508. I bought him back at the end of the day for $12 and was happy. It was just crazy. So this is mild by comparison.
Didn't you say there were I think, what was it, 180 puts that were trading for 181 and crazy things like that?
Yeah. There was it was 181 or 180 or 185 puts sold for either 181 or 186. I mean, $1 more than what the strike was. It was just insane what was going on. But nobody had ever seen anything like that.
Yeah, no, that was certainly a historic event, obviously, but also very much for the options and indeed the volatility space as well. As you've said many times, a lot of the modern options industry was really born in that event. We saw things like skew all of a sudden coming to the fore, people looking at their levels and saying, this is weird, this is not how it's supposed to work. And next thing you know, skew. It was an idea people have been playing with before, but that got codified there. And so the volatility landscape, listeners, never quite the same. Speaking of that landscape, Shelly, you guys are in an interesting one right now. I know Spike's futures still waiting for approval on those, but on the flip side, MIAX kind of tearing it up right now. What's going on in your neck of the woods since last time we chatted, sir?
Well, MIAX was in good shape for this type of market in that we have plenty of capacity. We've seen a pickup in market share across all three of our exchanges. I think a lot of that's coming at the expense of the trading floors that are closed. This is not the way we necessarily wanted to win additional market share. But that being said, I think the markets are running very smoothly. All the exchanges are doing an exceptionally good job. The market makers continue to provide liquidity. Quote counts are down significantly from what they were 2 weeks ago, which is a good thing, I think, for the industry. But things are running relatively smoothly.
And before we get off that really quickly, I mean, I've said it before here on the network, we're in this rarefied era now where everything across the board, everything, I don't care what you're talking about, Eurodollars, SPX, whatever it is, everything is 100% electronic right now. I was pretty surprised at how well things have been holding up overall. Obviously, liquidity is going to be a little sparse. Things are widening out. Displayed size a little bit less, as you might expect, maybe a lot less in some areas. That's kind of normal. But to have all that happening on top of the fact that it's all electronic 100% for the first time, are you as surprised as I am, Shelly, that things have held up? We haven't seen a major outage or crazy trades or crazy prints or a venue actually going down. Has that surprised you?
It's not surprised me. The electronic markets can handle anything, almost anything the floor can handle. I mean, there's some order types that we don't have that may have been used on the trading floor. But I think probably the biggest hiccup is for those floor brokers who didn't necessarily have an adequate upstairs operation. Are they able to handle the influx of orders and through the phones do their regular shows and have access to the trading floors? So I think that's why we've seen some market share shift. ISE has certainly picked up market share. All three of our exchanges have picked up market share. NYSE volume, their two options exchanges is down significantly. Philly's down significantly. It's what you expect with the trading floors. SEBO seems to be holding their own very well. I would assume if there are hiccups, it's between the IDB community and or the bank community that's trying to put their crosses up and not having access to the trading floor.
Yeah, kind of hard to put up all those fun crosses tied to different levels without a trading floor out there. Mr. Meatball, obviously, like I mentioned here at the top of the show, bit of a tumultuous, I think to put it mildly, week out there. What's been lighting up your tape out there? What are your crazies in the Vol Trading Club and the Pit Chat? What are they up to? What's catching their eye these days, sir?
I mean, let me first start by saying how bad I feel for all those IDBs. I mean, they're just such wonderful people.
I was going to say, I can see you plucking your heartstrings right there.
Board and just the best. And for something bad to happen to the IDBs, my heart breaks. My heart breaks. I kid, folks. We're not going to go down that path, but if you ever see me live and off the record, ask me how I feel about IDBs. It's been an interesting week. I think a lot of people kind of saw this coming. Things just got so oversold that it's not surprising to see us, have a little bit of a rally. We're off a little bit today, but then the big question I got all week is, we've had these huge rallies. Why is vol holding up? And I tell someone, I'm like, well, you're asking why, like, the spike index is 65 and the SPY is up 6%. You already answered your own question, right? The SPY is up 6%. The spike index is a measure of volatility, not whether we're going up or down. And both the VIX and the spikes have been extremely bid because when you have realized volatility of, 75, 80, 90, those indexes have to stay 60, 70. A 1% move in the SPY is the equivalent of about a 16 in the spikes. All right. So if we have a 6% move, all right, it is linear. That is a 96% volatility realized. So believe it or not, you could make an argument that the vol indexes are too cheap, not too expensive. Now, why are they priced the way? Because they're 30 days. They're not today. So there's some expectation that, maybe volatility starts to come off as time passes. And I will say right now, I'm looking and the major indexes are only moving about 2%. I'm going to say that if things stay that way, you could see some of these indexes get soft into Friday. But I got to say, if you are not sure why volatility would be so expensive, then go look at what volatility really means. It's not, option prices are derived from volatility. Option prices do not dictate volatility. Option prices react to volatility. And up 1,000 points is only slightly on the margins healthier than down 1,000 points in the Dow. Remember that, people.
Yeah, it's funny. It's how long we've been doing this show. We still confront that stigma, that belief out there that vol is only one direction. Vol is only to the downside. Sell-offs equate to vol. Upside rallies equate to happiness and joy, and there is no vol out there, which is still fascinating to me all these years later. Movement is movement at the end of the day. How many times have we said it? Volatility, for all the various complexity and nuance it gets into, at the end of the day, the calculations are pretty basic math. And if we're moving X%, that equates to Y volatility. I don't care which way you're going out there. Speaking of moving, we have been moving. I'm not sure if you heard, listeners, but a bit of a rally going on out there. In fact, technically, we were in a bear market. Technically, the bear is dead. The bull is back, rebounding 20% off the lows there on the bear markets. We said, obviously, today notwithstanding, today giving some of that back. But coming into today, we had rebounded about 20% off the lows. These numbers are kind of astronomical when you try to put them in perspective. The Dow alone was up nearly 4,000 points, 3,960 points. That'd be 21.3% from where it closed on Monday coming into today. So these are just insane levels. So insane that we had to ask you. I'm not even going to wait for the mailbag. I'm going to get to this now because we had to ask you guys here earlier this week. This rally is extreme by just about any measure. S&P moving 9% in a day, sometimes to the upside. We had just at the time when we posted this broken through the 2,400 strike. Wanted to know to you guys, what do you think about this? Is this real? In fact, right now, listeners, we're still north of it at about 25.70 out there. in the S&P right now. We said, what do you guys feel about this? Is this a real level? Are we going to close north of 2,400? AKA, this is a real bounce here, or B, is this more of like the mother of all dead cat bounces, in which case we're going to be back below 2,400 by the end of the week? And you guys came in overwhelmingly saying, almost 73% saying this is the dead cat bounce. We're going to close this week less than 2,400. I get the spirit of what you're saying. I don't know if technically we're going to make it by the end of that's a long way to go. 2,400 again out there. We got quite a ways to go between now and then. But I get your spirit. A lot of you are just fading this rally. Only 17% saying this is real, and nearly 11% saying, who cares? I'm in cash. I'm curious, Shelly, you've been watching this big rebound over the course of the past week and the subsequent drop-off, mild drop-off out there in volatility. What is your spidey sense telling you out there? How are you feeling about these levels? Do you think we've do you think the bear is dead? Do you think this rebound is for real? Or do you think we're in for more interesting times ahead, shall we say?
The bounce has been quite the bounce. It's so hard to say. My personal opinion, I've never been very good at picking the market. Of course, if I was good, I wouldn't be doing what I'm doing now. That being said, I'm still on the sidelines personally. But I don't have a strong opinion either way. I hate to sound so non-involved, but I'm so busy during the day running the exchange and doing what we do. And
I know, Mr. Meatball, you actually were talking up a bit of a rebound earlier this week, and certainly came to pass here. So ballyhoo to you for that. If you want some other metrics, listeners, about just how historic these weeks are, this past weekend over in the U.S., the box office hitting 0 for the first time ever, pretty much. So if that doesn't show you just how much the economy has ground to the halt in certain areas, that should give you a bit of an indication. Speaking of indications, VIX futures curve always gives us indication of what the heck is up out there. And coming into showtime, we saw the VIX cash was at right about a 64, and the VIX that front April future at about a 51 and change. You're talking about a 13-point premium of the cash over that April future. Get out to May, we're talking all the way down to 43. So you're talking about 21 points between that May future and the cash. I know you guys have some questions about that. I think we'll get to that a little bit later in the old Vol voicemail. Mr. Meatball, sir, have you been, I'm sure you have been, paying attention to the vacillations of the VIX futures curve? And if so, what is resonating to you out there these days, sir?
I mean, there's just been so much out there, from a VIX curve. I mean, the amount of opportunity that's out there is incredible. I was noticing they've started adding June. So I'm going to go off on a little tangent before I get into the VIX futures curve, or maybe we can talk about this. But I went and, in times like this, everyone looks to Warren Buffett and asks, hey, is there, what is Buffett doing? And my answer is he's probably selling really long-dated puts. And so I was looking at a trade today. And so in Berkshire Hathaway, Series B, so the Class B shares, they now have June 2022 puts listed. June 2022 puts. I can sell, and I actually did do this small for a little somewhere, without getting too deep. I can sell with Berkshire 180. So Berkshire's off about 25%. I can sell the June 2022 put, which has 1,150 days to expire, give or take, at $21. All right. That option has 50 cents of VEGA to it, and it is well out of the money. And so right now, that long-dated vol is about 45%. 6 weeks ago, where do you think 1 year implied volatility was trading in Berkshire?
In Berkshire? Oh, it had to be anemic. It had to be, if it was in the 20s, I'd be amazed.
It was 16%.
Exactly, yes.
So I can go out to Jan 22 and sell an implied volatility of 30. 32 in Berkshire. So think about the amount of vol I'm getting to sell there. And what I take delivery on Berkshire Class B for $139. So the one thing one of my clients said, well, what if they both die? And I was like, oh, there's that.
you got the octogenarian risk lurking out there.
Yeah, you do. So speaking of, let me get to the curve though. It has been earlier in the week because I don't know if you guys, we've talked a little bit about what happened with TVIX. But TVIX last week, TVIX almost blew out the vol markets again. We almost had an ETN blowing out the vol markets in that it ballooned in value. TVIX went from about 400 million to 6 billion in about a week and a half, and all from doubling in value. And if it had gone much higher, it would have really kind of taken over the space. And then if we gotten a sudden sell-off, it could have gone kaput and wiped out, it would have, let's just put it this way, it would have made XIV look like a walk in the park with the amount of wealth that would have wiped out. And so we got real close to a volpocalypse. Or you might say we could have had a volpocalypse. We could have had a vol lapse from the collapse of it. And it didn't happen. But that actually really changed the behavior of VIX futures as a whole, the implied vol space. And I'm sure they saw this in spikes as well, in that we had kind of we had sell-offs with vol in, because vol got so big, and those sell-offs are really what saved TVIX from blowing up. So last Friday, if we were not down big, I think that we had the real risk, Thursday or Friday, one of the two, we were at real risk of TVIX blowing out. And thankfully, by the time we rallied on Tuesday, TVIX had lost most of that kind of ballooned value. And so we're kind of back in the safe zone for that. But be aware, if you want to know what's driving VIX and VIX futures, keep an eye on those ETNs, notably TVIX and UVXY. If those start to get a bid again and start to get really bought, especially with VIX futures and spikes in the 50s and 60s, you could see some really crazy end-of-day vol action. So right now, the ETPs are kind of the dog, and VIX futures and VIX options and the spikes are the tail. I will say that.
Now that's the funny thing, because everyone's always hitting us up here these days. How does this vol equate to 2008 or all these other time periods? And even just going back as recently as 2008, the vol space was such a different beast. You didn't have these massive leviathans like your TVIXs and your VXXs, and certainly didn't have your XIVs, which we don't have now either, but we did for quite a while. And so the volatility ecosystem, the volatility universe of various ETPs has just exploded tremendously. And so the notion that these things could be out there and they could be so over-levered and overvalued and everything else that they could be threatening the vol space just wasn't even a concept back in 2008, which is what makes it so hard to compare and contrast these. You can see the abject levels of VIX and say, oh, this VIX level is similar to this VIX level, therefore things must be similar. And yet they're very much night and day from a lot of different perspectives out here. But you're right. We talked about TVIX many times. It's usually not in the most glowing of terms, and it was teetering on the edge of the precipice there last week. So that would have been interesting to see if it had indeed come to pass, if that Volmageddon had come to pass, if we had yet another massive vol ETP blow up and take a bunch of people with it, and what the backlash would have been for that. Because after XIV, it doesn't seem like there is a lot of patience out there for another one of those happening. Certainly would have put the dampers on the approvals of things like this SVIX and other things coming out there who want to try to replicate that space somewhat. Let's move on out to see what's trading out here this week in the vol products here, in a little bit maybe safer and saner landscape. Because you're right, the rallies we saw, the movements out there, the vol coming off a little bit, kind of took a little bit of that steam out of the old pressure valve there. So got a little bit of life back for market makers, for products like TVIX and a bunch of other folks out there. Moving on out here to Spikes Land out here in Spikes Options. Our old friend, the 1x2 guy, still, or gal, or whoever it is, person, they still have a decent amount of size on out there, which is kind of interesting. The big print out there still. Big position out there in top 5 in Spikes Options lands right now are the April 25s, 35,500, those bad boys. Number 2, the April 17, 17,750 of those. Then we go down to the June 95s, number 3. Number 4, the April 130s, number 5. The July 24 calls, total about 54,000 OI. So still pretty similar to last week, which shows they haven't taken off that latter portion of that. I'm going to cheat here again. I'm going to bump up because we got so many listeners asking questions. I'm going to bump up a listener question here. Now, this comes from, I can't find it now. If you get to the mail, we will. But effectively, the question was something along the lines of why hasn't this Spikes 1x2 guy taken off his position? And the answer is kind of twofold. He has taken off a lot of it. If you recall, listeners, the OI got up to 90-some-odd thousand, so in total in Spikes Options. So he has taken off a good chunk. But still, you're right. There is still a decent size of that position left. Shelly, I'm curious. I know you're watching a lot of the volume out there day to day. Has it surprised you, the old school OEX and SPX market maker in you, that perhaps they haven't unwound more of this 1x2, or does that maybe make you think that, hey, they're keeping some of their irons in the fire in case we head back up again?
I don't know what they're thinking, but my hunch would be they've actually hedged the position. Since we don't have the Spikes futures, the market in the Spikes Options is fairly wide. So if they wanted to unwind in the marketplace, they may have gone to VIX. They may have gone to VIX futures. Now, while the products aren't fungible, they do move pretty much step in step. So I wouldn't be surprised if the risk at least has been laid off. But again, I also don't know what their exposure is. If they're hedging a portfolio, maybe they want to keep the position on for some further period of time based on that portfolio.
Yeah, they could have a need lurking out there that they can't take all of it off, but they have unwound a decent chunk of it out there. I don't have the listener's name in front of me, so whoever it was who asked that, they have not all of it, but they've unwound a decent portion out there. Let's get on out to VIX Options land again. We've kind of seen this dance in VIX a few times before, or many times before, over the course of the past few weeks. So coming into today, a decent move like this, we were swinging 3-4% at one point, now off about 2%. That would normally inject a lot of paper, a lot of volume out there in VIX land today. Not even 250,000 contracts on the tape as of a few minutes ago, so pretty light, even though the ADV out there is still pretty strong, closing in on about 1.3 million contracts a day. Let's break down our top 10 out here in VIX land right now. Obviously, a lot of paper has come off the board. Also, we're seeing a lot of churn and burn on a lot of strikes, which is why the number one position out here may surprise you in terms of its size. Even though net, there's still about 10.1 million contracts open out here, looks like about 4.8 or so on the calls and about 5.3 million open on the puts. So puts leading the dance, probably not surprising to a lot of folks out there. Number 10 out here in VIX land, the top big positions here, the April 18 puts. Only 108,000 cost you to break into the top 10 in VIX land out here, which is kind of interesting. Again, we saw a lot come off the board this week, so that's obviously playing a role out here. But still, overall net size, perhaps not as big as you might think. Number 9, April 17 puts, 109,000. Number 8, April 30 calls, all the way out to 30, which seems so far away and so much upside just a few weeks ago. Now seems positively quaint by comparison. 112,000. Number 7, June. Only June on the list here. June 15 puts, 113,000. Number 6, July 28 calls, 114,000. Number 5, May 28, $1.29 open there. Number 4, April, back to the April 22 puts, 139,000. Number 3, May 35 calls, $1.44 on the tape. Number 2 here, April 20 puts, 172,000. Number 1 with a bullet out here are the weeklies expiring on the 1st, the VIX 23 puts here. 179,000. Only cost you 179,000 contracts to take the top spot in VIX land right now. So if you too want to throw out a couple 100,000 contracts, you can be the number one player in VIX land out here right now. Maybe not total net position, but from an overall number one size strike, you can certainly take the top spot. Again, kind of a light day we said coming into today, so not a ton on the tape that was lighting it up out here. Looks like the biggest prints out here are the APE 67 halves, going up about 11,000 times against the APE 45 put. So maybe a bit of a risk reversal out there, 10,908 times. Also saw, that's not enough for you, that same trade, 7,272 of the April 90s going up for $2. That just shows you what vol regime we're in. The April 90s are trading $2.45, and someone took them down 7,272 times. $2.45 for the April 90. Let that just sink in for a second out there, listeners. Also, part of this funky multi-leg spread, they did 3,636 of the April 60 puts, and same number of the April 47 half calls. So all sorts of weirdness going up in this multi-leg extravaganza. Looks like they're rolling and adjusting a bit here, but still. The Ape 90s certainly caught my eye out here. Yesterday, also surprisingly a fairly light day, given the fact that we're on the heels of one of our few multi-day rallies we've seen out there in the markets for some time. Total of only 356,000 contracts on the tape yesterday. The big option out there were the May 40 puts, doing about 20, almost 21,000. Most of that coming in what looks like maybe some synthetics out there. Was the May 40 puts going up 10,000 times against the May 40 calls, doing it for 30 cents. And it looks like they're doing the synthetics. They're not doing a straddle here, but it's always kind of hard to tell. They did it 2 times, so a total of 20,000. That was pretty much the big print of the day. Also saw someone doing it out in April 10,000 times as well. 42 half in that strike out there. So someone liking themselves some synthetics out there in VIX land on Thursday. Wednesday, a little bit more paper, 515,000. The big contracts out there were the May 70s, actually, 33,000 of those going up out there, as well as about 30,000 of the May 25 puts. I don't think those trades were related, so it looks like just funky strike selection across the board. The biggest print on Wednesday looks like another May synthetic going up 10,000 times, a May 29 this time. So someone out there is loving himself. At 6,500 the April, someone's loving himself. Some of those, which is, I guess, not surprising if he can get some liquidity there in the options that perhaps he's having a hard time finding in the futures, or vice versa. Might make some sense. Tuesday, more active day, 808,000 contracts. Not seeing the million-plus contract days we were seeing last week, so obviously the ADV is going to come in a little bit again. 808,000 contracts on Tuesday. The biggest contract out there, again, the May 40 puts, 76,000. So that was kind of the lion's share, almost 10% of the paper just on those May 40 puts on Tuesday. Also saw April 30 puts doing about 44,000 contracts, and the April 72 half calls. Yet again, lovely strikes out here. It's 37,000 of those bad boys going up. The biggest print out here looks like it's a June vertical on Tuesday. June 27.35 vertical going up for about $3, 18,816 times. Seems like paper was selling it, so hopefully let's think they're closing out a vertical. Let's see, they're not opening on either of those legs, so let's hope they're closing out a vertical that worked out pretty well for them. And Monday, another decent volume day, but not a ton, 764,000 contracts. The big print out there, 60,000 of the April 37 half puts going up total on the day, including one big print of 45,000 by themselves, pretty much right off the bid there near the open for $2.30. That one was opening, so perhaps someone drawing an aggressive line in the sand here to the downside in VIX land, 45,000 times. That's pretty aggressive. Mr. Meatball, I know you spend your days when you're not talking to me. I know it's hard to believe you're not talking to me all the time, but you're not. And you're watching yourself some VIX options. Any big prints or interesting trades coming across your radar this week, sir?
Yeah, I didn't see any giant trades. We're not getting the color we get with nobody on the floor anymore, which I miss. But I will say that there has been, the volatility has been really firm. And, today's probably the first day that I've seen in a while where VVIX actually kind of did what you expected. I have seen, the Vol, the Viking probably acting the same when you guys launched the Viking, which is the single greatest vol index name in history.
You just want that name royalty. That's all you want, sir.
Yeah, it is. But, what's interesting is we've been seeing vol rally with the S&P 500 and kind of sell off with the S&P 500 over the last week. Seeing that a little different today. We are seeing vol rally today as VIX is rallying. So just a little bit of upside being bought. In terms of specific prints, I'm going to take a look here, see if there's anything interesting in my on my Trade-O-Rama that I do get. And probably the most interesting trade I've seen today was a risk reversal in April. They did the 45.67. That one was kind of interesting. They did that for some size. But yeah, a lot of April. April's been carrying the lion's share of the load. But I will say, I'll bet you that the SIBO can't wait to get, a lot of people wondered whether there would be a need for a floor. And with SPX and VIX, and the joke being that Terry Duffy from the CME has been quietly wanting to destroy the CME floor for a while. But I think that we've seen that certainly in some of these interesting names like VIX and SPX, where you do see some really complex trades. It's nice having a floor to hash things out. I miss having some of the clarity and color, and getting some of that type of information. I do miss a little bit, and so I have a feeling that those floors will be back as soon as they can be. But I've not seen anything really crazy go up in the volatility index.
Yeah, you're certainly right. I definitely think SIBO has more skin in the floor trading game than CME does. CME has been quietly unwinding their floor for some time. So if it comes to pass that the CME floor never reopens, I wouldn't be entirely 100% surprised. If the SIBO never did, I would be very surprised. So SIBO still has a lot of skin in that game. The SPX, the VIX, still storied legacy. SPX more legacy, VIX a little newer, but still have a strong pit presence out there that is difficult, as you mentioned, to replicate. And also from the customer experience, they like having that color, that flow, that kind of stuff that, again, kind of hard to replicate. Not impossible, but hard to replicate in an online experience. Let's go on out now to another product. A lot of you love to experience, usually to the downside. Lately, not so much, even though this past week it has been playing ball with you. It's our old friend VXX. Coming into Showtime, it was at a 50.5. That puts it down about exactly 10 handles from where it was last show. It's dropped a little bit more since then. It's down about 49.25, so it's off over 11 handles from where it was last show. So all of you who have been waiting for these moments, perhaps hopefully if you're just not just loading up, we talked about it before on the show, hopefully you're not just loading up on these crazy puts because the vol levels were so astronomical. You could have had these moves and still lost money or not really done as well as perhaps you hoped, given all the madness out there. Not a ton of paper out there today, only about 120,000 contracts on the tape coming into Showtime. The ADV, though, is pretty strong out there, as you would imagine, over 600,000 out there. Let's break down some of the top positions out here really quickly. I want to get some of your mail, too, so let's only do a top 5 out here. The April 20 puts, 52, almost 53,000. Number 4, the June 18 puts, 67,000. Number 3, the July 25 calls, 72,000. Numbers getting pretty big here for VXX. Number 2, April 25 puts, back to April again, 91, almost 92,000. Number 1 with the bullet, the June 45 puts, 96,000. That's pretty sizable for VXX, and it kind of doesn't put it. It puts it within spitting distance of VIX. It's about 80, 90,000 contracts below what the number 1 position in VIX land is, which, say that out loud, that sounds kind of crazy, that VXX would be within spitting distance of the top spot in VIX land, but yet that's where we find ourselves out here as of today. Some big prints out there today. Looks like the May 70s are the big print. Actually, it looks like a vertical. The May 46, March 4670 vertical going up 5,314 times. Looks like paper selling that bad boy, doing it for a whopping $3.35. I love spending that 11 cents on the 70s. Gotta love that. Interesting stuff. Mr. Meatball, I know you're crazies. They love themselves some VXX to fade it, to load up on it, do ratios, all that fun stuff. What's been catching your eye out there in VXX land this week, sir?
It's been really interesting how VXX has been a classic example of how volatility, the volatility futures and the VIX itself don't really link up, right? We've seen the VIX kind of firm all week, and VXX, at least until today, was down pretty significantly. And, I think that's kind of interesting. So that's something to be on top of.
What also is something to be on top of is your mail. So without further ado, let's head right on into the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You guys have lots of questions. Let's just get into them here. Comments as well, like this one from Jans, or perhaps Jans. Let's go with Jans. He says, VXX June 30 puts were $1.37 at 3:30 on my broker yesterday. What the heck? To use the family-friendly version. I can't buy these and I can't sell them. Who's trading these? In case you're wondering, that's 148% volatility. Yeah, we've been saying that for a while here. Things are crazy wide. You kind of got to pick your poison and be very judicious. That's why we're saying be small, be nimble, be very studious in how you're putting things up. That also reflects the point I was just making earlier. People were coming to us saying, these got to get in this downside in VXX, and we're saying, watch out for these levels. They're astronomical. So if you paid 150% volatility, which is pretty much what he's putting here, if you lifted that offer, it got close to at 3:30. Guess what these puts are? They're printing earlier this morning. We said VXX is down over 10, 11 handles from where it was. I forgot when this question came in, but it was probably after our show last week. So it's sold off quite a bit, probably about 10 handles from this level. And you're seeing these puts are still trading $3.03, $3.10 today. So again, that's what we're talking about here. If you just go willy-nilly and just gobble up these puts at any volatility, or goes for any option out there, you need a crazy move. And we had a crazy move, and it still wasn't enough because the vol has come in. So this is kind of illuminating, Mark, of what we've been saying here for a while on the show, right? You got to be judicious with these levels, because if you just come in, gobble it up, and whatever the name is, could be VXX, could be something else, without paying attention to the vol levels, you're probably going to end up regretting it. Would you concur, sir?
Yes, I would concur.
See, you and I are agreeing on something. The world is crazy.
I know. Beautiful, right?
We got similar comments here. A lot of people have similar comments here. This other one coming in from Eldrin, he's complaining about SVXY. He says, how am I supposed to trade in these markets? 28 cents at $1.45 for the SVXY April 28 put, expiring next week. Give me a break. I think at the time he sent this in, SVXY was around 31 and change. So these were $3 and change out of the money puts going out a week. And they were over $1 wide. Shelly, is this a complaint you're hearing from your end users out there as well? Some of the traders and customers, are they coming to you and saying, hey, these markets are getting a wee bit wide? Is it something you're noticing as well out there, as we're in this crazy regime now, not just from a vol perspective, but from the fact that everything's 100% electronic? Is it surprising you? Are you hearing these same comments, or is this kind of what you expected?
It's not surprising me at all. I talked to a lot of our members, and basically from the liquidity provider's perspective, they try to keep an inventory of net units. They need to protect their wing risk. And when you can't get net units, it's really hard to make tight markets and everything in between. So there's liquidity out there, but there's not a ton. And everybody's being really risk adverse at this point in making markets. Because you have to understand, the market makers have markets out there and now 1.3 million different options. They're on the bid and offer and all those on all 16 exchanges. There's definitely a squeeze on how much liquidity is available in the marketplace.
Yeah, I think our buddy, Mr. Schwartz, the Flow Master, was just talking about it, I think, this morning. He's here it is. Another consequence of extreme volatility, option contract listings jumped 20% to a record 1.23 million calls and puts out there, creating a significant challenge for market makers routing continuous quotes to 16 exchanges. So, of course, listeners, more strikes coming into play. That means more puts and calls that need to be quoted by these firms. And the more of these you add, that's risk. potentially in markets like these, that these are very much just added risk. So I don't like hearing it. And I think we had, who was it, Matt on our advisor show earlier this week, and he said these are some of his saddest days as a former market maker to see the width of the markets that we're getting out there right now. But it doesn't, I'm with you, Shelly, it doesn't exactly surprise me given the fact that so many other things that are going on behind the scenes to make these just very difficult markets out here for the market maker. Look at Ronin going the way of the dodo this time last week. So these are dangerous waters out there. It doesn't surprise me. Unfortunately, that is more than about $1.20 for an April near out of the money put in SVXY, Mr. Eldrin. Everyone else has got similar complaints. We hear you. We wish, this is kind of the counterpoint to what we've been saying for years now. There's fewer and fewer market makers every year. So when times get tough like this is the end result of that. And we need more. I don't know how we get more. It's a topic I always broach every year at the Options Industry Conference. There is no conference this year, so I can't hold anyone's feet to the fire on that topic this year. But this is clearly when we see the market makers like the offensive linemen. I made this comment to a reporter this week. They're like the offensive linemen of the options market. No one ever cares about them or wants to hear about them until something goes wrong. Then all of a sudden, everyone's all obsessed about it. And that's kind of where we find ourselves right now. Let's see here. Let's go this one from Alex, because I know your buddy, Mr. The Rock Lobster, had some comments for this guy, because I think he included him on the question. This comes from Alex Lundgren. He says, will someone please explain the VIX and April future disconnect to me? He said, Vol man, please help. I think he included you on this as well, Mr. Meatball. He's kind of talking about what we touched on earlier in the show. Just coming into the show here, we saw about a 13-point differential. Not quite the chasm that it was. It was over 16 points a few weeks back, but it's still a pretty wide gulf there between that VIX cash and that April future. Mr. Meatball, since you were invoked on this as well, what do you have to say here for our friend? What was the name here? Mr. Alex, who wants to know why we're dealing with such a crazy chasm between the April future and the VIX cash, sir.
Well, the VIX cash is what volatility is now, the VIX future. And, these future contracts are forward volatility. That's where we think volatility could be. It's no different than contracts on lean hogs or on corn. So, if you go to the cash market in hogs, they're trading $50. The June hog future might be 70. Why? Because they think in June people are going to be grilling outside and eating baby back ribs and pork chops on the grill and all kinds of things like that. And China will have opened up by then. And so the June future is a lot more expensive. And so volatility is very much the same way. It's a function of how much are we moving, which is VIX. And then the VIX future is a function of, well, how much is the VIX going to move? How is VIX going to change between now and the end? And there's some real direct math that you can do actually behind it that I think Andrew may have put out, and our friend Vance Harwood may have put some stuff out there like that. But there is some concrete mathematics behind how this curve moves and changes and should be priced. But it also is affected by order flows and money flows, which is why last week we actually saw the VIX future moving more than the index. But you have qualities of mean reversion in there, and you also have, forward volatility pricing that's affecting things.
Yeah, I think your buddy there, Mr. Rock Lobster, he also chimed in on this. He said, the vol man wants to lift the VIX futures, but weight of forward vol too much. VIX is a slow grind in backwardation, and better to trade off larger reactive moves. More vol butterflies for a bit, it would seem, as the vol moves are less so. And he included some fun charts here of forward vol. Check it out if you're not following the Rock Lobster at Option Vol. We'll probably retweet it for you there as well. Let's see. We got to get to the crystal ball, but I want to make sure we get some more of you guys on. Let's get another one here. Let's go to where are we here? We got so many here. Long ratio put spreads, Simons, iron condors. So many crazy things. Let's go to, well, this is kind of what you were just talking about, Mr. Meatball, so we can wrap up on this. This comes from PANKASE. I like that handle. He says, what are your thoughts about playing in longer-term vol here, 1 year plus out, worth it or not enough Vega bang for your buck? Well, you're going to get more Vega bang the farther out you go there, Mr. or Mrs. Pancake. So hopefully you're going to get enough Vega. The question is whether relatively it's worth it or not. But compared to playing in 1 to 3 months, you should get a heck of a lot more Vega going out 1 year plus. But Mr. Meatball, this is kind of your trade du jour right now. You're going on about your Buffett puts. You want to recreate these Buffett puts out here. So what are your thoughts here from Mr. or Mrs. Pancase here? They want to play in 1 year puts. Yeah, I think you're recommending the Buffett play. Is that your go-to?
Yeah, I mean, if you want to play in 1 year puts, go after names that you love and like. I like, there are a lot of names that I think are really interesting. I've talked about Disney. I think Coca-Cola is probably completely oversold. Based on going to my grocer's pop aisle, Coca-Cola should not be back to $40. There is as I stated, that long dated stuff has so much Vega that I think you got to take it. You gotta find some levels you want to do things and do it. J&J, even the airlines. I was laughing because in American Airlines, they let me sell, you'll like this, Mark, the January 2021. So this has 9 months to go. I got to sell the $3 put at 80 cents. That is
$3.
And listen, I understand there's risks associated with American Airlines, but you sell, let's say, 50 of those, you collect $4,000, and you are risking 11 grand. That's a pretty nice yield. And that's probably better than what you're going to get buying their distressed debt. And you have all kinds of ways of hedging that on the way down. So that's I'm all for your approach to put selling.
Yeah, it's work for Mr. Buffett. He gets to pick up the phone and command that Buffett premium, which is always nice, above and beyond what is listed there in the marketplace. So if you too can command that, it's nice. But as Mark was alluding to, if you're pretty judicious, you can go out and find some ways. So I think short answer to your question is you should get a lot of Vega bang for your buck, and hopefully that's where you're trading. And indeed, more Vega as you go farther out, so that's going to help you. So not usually a place we play here on the show, but right now, these times, it makes it kind of interesting. Again, the caveat being, if the markets are $1.20 wide for a 1 week VXX near out of the money put, going out over a year, expect some pretty crazy markets out there. So as long as you're judicious, don't just hit bids and lift offers. Try to work some stuff, and hopefully, if you get filled, you can get some decent levels. But yeah, it's going to be wide, so bear that in mind. As we head on into our final segment, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is the portion of the show where we attempt to wrestle with the slippery pig that is volatility here. And the last week on the show, well, before we get to that, let's pull up here really quickly. Give us an update on where we stand right now. Our old friend Spike's right now at a little bit shy of 63. So it's come off a little bit, but not much since the start of the show. We're seeing about similar level here for the VIX cash. Let's look out to where we were this time last week. We had Mr. Ewan Sinclair on the show last week. He actually was fairly close here with his prognostication of a 58. Mr. Meatball, I do believe he was doing his, again, we had a little bit of a explosion with the notes right at the end of the show last week, so we lost some of the crystal balls, but we're trying predictions. We're trying to get them back for you as we speak. I do believe Mr. Meatball was somewhere around, he's been playing the keep it the same game for the last few weeks. I do believe you were at a 49-38 again last week, which is where you were the week before, which would put you about 14 odd handles away, almost exactly. And for myself, I do believe I was in that low six. Well, we're trying to get my prediction here as we speak, so I want to make sure I don't misspeak, because I have a feeling I know where I was, but a lot of stuff is happening over the course of the past week. So I'm going to go out on a limb and probably guess I was the winner, but we'll get that for sure. Ewan, of course, coming in second here, so he can't take his place. So tell you what, Mr. Meatball, even though I don't have exact confirmation yet of my victory, I'll be nice. I'll be charitable. I'll give you a chance to choose whether you want to go first or you want to go. You want me to go first, sir.
You know, I gotta say, I would never let you go first because you will pick exactly what I'm going to pick. I gotta say, I think that we've got a whole weird couple of weeks set up here the last few weeks. So I think we had 3 weeks of utter terror. We've had 1 week of rip roaring higher. I think next week ends up being the week where maybe vol starts to take its first real breather. So I'm going to fade this market, the vol market. Maybe we could still be lower in the S&P, but I'm going to fade this market, and I'm going to guess 49.38.
How did I know that you were going? Now we have confirmation. I knew I was in the low 60s. I didn't want to speak out exactly to the strike, but I knew I was looking pretty close. Yes, I was at a 62 this time last week, which at spikes right now, 62.87, puts me within exactly our 1 point winning distance, which we may have to revisit that of now, because that 1 point differential makes sense when VIX is around to 14 and spikes not a little bit more challenging when they're both in the 70s or 60s. So, but still within the 1 point spitting distance, I get myself a little bit of the old winner chicken dinner here last week. So I'm going to start adding all these into the spreadsheet so we know exactly who's taking it home here this week. Mr. Meatball gets a 49.38 for next week. All right, so with that victory in the can, I should have gone first, but nice guy that I am going second here. Again, we're at about 63 in both vol indices right now, listeners. And, I've been saying it earlier on the show this week. I've been saying it again today. I'm not feeling a lot of this rally. Obviously, we're not rallying today, but for most of this week, we were bouncing almost 20% off the lows. Given the fact of what the other shoes are waiting to drop out there and what we're seeing out there, and again, listen to our advisor's option show we did earlier this week. It's going to be hitting the network. If you missed it live, it's going to be hitting the network soon. Some interesting nuggets in that one there as well. I'm not too optimistic about lower volatility levels. I would be happy to be wrong on this case. I would love to see VIX and spikes in the 30s or 20s and a seeming semblance of normalcy returning next week. I just do not see that in the cards. I'm going to keep myself around where we are right now, maybe a little bit higher. I'm going to come in about a 65 even for this time next week. So getting a little bit more juice trickling in out there as we continue to see some of these other shoes dropping out there in the vol space. All right, that's going to do it. Ran a little bit long today, listeners, but of course you guys have so many questions. We could do a whole vol questions episode. Maybe we will one of these days, but we've been trying to get a lot of your questions answered on all the shows this week. So hopefully you're enjoying that. Hopefully you're enjoying the slew of content that has been coming your way and more still to come for this week here on the network. Before we go, let's go back around the horn. Let's go out first to my old friend, Mr. Shelley here. Mr. Shelley, sir, I know you guys are all hunkering down in place like the rest of us are, trying to run an exchange remotely, which has to be a challenge in and of itself. But if folks are intrigued by spikes, they have questions about it, maybe they want to know more about MIAX, where should they go? What should they do, sir?
Oh, come visit our website at MIAXoptions.com. MIAXoptions.com/spikes will get you to the spikes webpage. And there's all sorts of information out there on the product.
There you go. MIAXoptions/spikes is the place to go. Get your spikes quotes. Get that snazzy little video that explains what the heck spikes is in about 2 minutes. Get some quotes. Get some data. And, of course, get links to a fun show called Vol Views. I'm a fan of it. You might like it, too. All right. And, Mr. Meatball, I know you've been pretty active on the live event scene of late. How's that going? And you got any more cooking that may interest our audience, sir?
I got nothing in cooking. Mark, I'm thinking maybe what we need to do is make it our guesses a percentage of the spikes index. So you have to fall within, like 3% or 5% of the index. What do you think about that?
might make sense. I'm willing to revisit it, given the fact that 1 point is pretty darn precise in this market right now. That said, I did hit it, so it can be done.
Maybe you really did. It was impressive. Hey, yeah, go to optionpit.com and make sure you're getting our blogs and you're on our email list, because if you're not, you're missing out on all kinds of great stuff. You can hear about the fact that I was distressed that my cleaning lady couldn't come last week.
Yes, these are the first world problems we wrestle with. Optionpit.com. If you too want to wrestle with them, you know it's getting challenging, listeners, when he wants to widen out that bullseye for the vol crystal ball. We'll see. Do you have thoughts how we should adjust it for these turbulent times? Make it a little easier for the meatball to win? We'll see. Of course, and on behalf of Mr. Meatball and Shelly and indeed myself, I want to thank all of you out there downloading, streaming, subscribing, for listening live, for sending in your questions, your comments, for chiming in, for voting in our polls, all the fun stuff that you guys have done this week. Keep it coming. Stay safe, stay judicious, stay home. Don't go out rampaging and running amok out here. Check your screens, check your trades, see what you can do. But don't go crazy short vol, short premium into the weekend. We all know a lot of crazy stuff can pop off over the weekend, so keep your powder dry, and we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.